Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. First of all, let's get straight over to gold, which in fact on the open has broken out to 1,588 US dollars per ounce, up 1% right off the Sunday open this evening. We've actually taken the opportunity from this, as many of you know, we've been building positions on gold since mid-December and continued in the latest week to add on dips, as we discussed last week, between that 1,545 to 1,555 US dollars per ounce. Those of course are the levels that we talked about. On gold asset of the day, we've actually just taken the opportunity to bank 6 positions here on gold, over 3,000 points on the open here. So I congratulate all of you out there as well who do follow us at the Gold and Silver Club, who've also capitalized on this. Certainly many of our members at the Gold and Silver Club have had a big windfall off the back of the open today. Not only that, we've also made sure we've squared up on 50% of our profits with silver, leaving the rest of the trades running, and we've just banked 130 points on platinum as well. So it's been quite an incredible start to the week so far. We have seen a lot of fear in the markets over the last few days, as of course there are worries that China is struggling to contain the spread of the pneumonia-like virus, which has sparked a bout of risk aversion in the markets. And as a result, of course, we have seen gold breaking out to 2-week highs. Silver's had a significant breakout here on the open as well. Of course, you remember last week we talked about the fact that we continue to buy silver on dips, that we liked it between that $17.70 handle up to $18, that we perceived it still as a big buy opportunity, as a sleeping giant, whilst the price was under $18 per ounce. Let's go over to the charts and we'll actually talk you through exactly what we're looking at as we go into a fresh week. So first of all, let's actually move directly over to gold here, which right now is trading at 1,581 US dollars per ounce. The first point to note on gold this week is, of course, that China are on their Lunar New Year holidays this week, so it's a bank holiday throughout the week. And as such, we're unlikely to get a great deal of support for the precious metals over the Asia-Pacific session throughout the week. We've seen this time and time again in previous years when we do have the Chinese New Year holidays. This is where you can see some lackluster price action during the course of the Asia-Pacific session for the precious metals. And you will see that we've got a gap from the open here, which is still yet to fill at the moment. My anticipation over the course of this week is that we could consolidate. We may in fact get a further pullback on gold between now and the end of the week, and then setting up for an opportunity to buy back towards around 1,555 to 1,560 US dollars per ounce a little bit later in the week. Now, usually, of course, we do get this counterflow over Monday and Tuesday once we start to get into the London session and of course the European session as well, where typically gold we do see profit taking, and normally you see the lows get put in earlier on in the week on the Monday and Tuesday. But this week we don't have as much support coming in during the Asia Pacific session because of the China New Year holidays throughout this week. So essentially, gold has fulfilled our expectation in the latest weeks here, was really that it was a buy opportunity here, being continued to be buys on all of these dips. It definitely did require a lot of patience and stamina over the last couple of weeks. We really drove higher here into the close on Friday, and a lovely pop higher here from the Sunday open, which has really enabled us to close out all of those trades. As I mentioned, we've now banked over 3,000 points on our gold trades, on a combination of our longer term positions that we executed from mid-December and also the latest range trades that we took last week as well. So again, well done to those of you out there that also were able to capitalize on this. Now, silver, as I mentioned last week, again, so many traders were looking at basically a head and shoulders pattern here, left shoulder, head, right shoulder, potential to break down. This is where we were buying on the dip last week and really made sure that we capitalized on that. We actually built up a total of 8 positions here on silver, and now we've seen it break out to $18.25 per ounce. So far today, silver's up about 0.35% on the day. A little bit of a gap on the open, pullback here. I perceive this to be a bull flag. Now, normally, in fact, the price action with silver is quite strong in the final week of January. We've already seen that right off the open. We may get similar price action to what we're expecting with gold this week, which would be a bit of a consolidation. Ultimately, I'm looking for higher prices on both gold and silver as we go into the first week of February, but it is quite usual at the end of the month, particularly given that we've gapped on the open. We've seen a bit of a squeeze higher here to see a bit of consolidation, that counterflow coming in over Monday and Tuesday, and then I'm looking for additional pullbacks as buy opportunities from midweek onwards, essentially on the metals, where I think for now, again, as is always the case, I would not FOMO in at these levels. I'm expecting that there's going to be a better price for gold and silver over the course this week, actually more specifically for gold, where I'm looking for this filling of the gap and then essentially back towards approximately that 1555 to about a 1565 zone over the course this week. That's where I'm looking for an opportunity to buy back in for gold for the next rally as we go into the month of February. That's the anticipation at the moment. And this then leads me over to crude oil. So crude oil, in fact, right now is trading at $52.88 per barrel. Again, in the latest week, we've seen a very significant correction on US oil here. So far over the month of January, it's down 13.5%. We have started to build into some derivatives here with the energy markets just off the open today, such as gasoline, which we perceive as a great seasonal play here as we start to progress into February, and then of course March and April. Typically the energies, they do very well from mid-February onwards. They're strong performers usually into March and April as well. So once we do form a bottom for WTI crude oil, for Brent crude oil, it's very likely that they could offer some great opportunities. Obviously, the narratives that we're seeing at the moment and the fear regarding the virus and the spread of this from China is, of course, having a significant impact on oil right now. So you want to just bear that in mind. We have actually come down to a major level here, which is around $52.50 per barrel. I want to see how oil does respond to this level. We're on US oil at the moment. You can see very clearly where we're coming back down towards the lower end of a channel, and we may well get supported at this zone. So I am quite interested to see whether 52 to 53 US dollars per barrel over the course of this week, whether it does lend support, because once it does provide that additional bounce, we start to see a bottom get put in for the energies. There is a lot of upside potential from here. It's very extreme to see oil down over 13.5% so far over the month of January, particularly from a seasonal point of view. It's normally very strong over February and into March and into April as well. So once the bottom is in, it could really provide some great opportunities. So I would absolutely keep an eye on oil here. If it was to find support around the 52 to 53 US dollar per barrel handle, I would be looking for a retrace back towards 55 to 56 US dollars per barrel if we can hold at this zone. So we really want to watch this carefully over the course this week. Of course, keep on top of all the headline news items as well. And again, I congratulate all of you that have also managed to capitalize on these breakouts on the precious metals right off the open today. So well done. That's worked out perfectly just to start the week and the final week of January here as well. And of course, if you would like to join a community of successful traders at the Gold and Silver Club and really get an additional edge with your trading so that you're not just basing all of your decisions purely on, for example, just technical analysis, you want to encompass more research into your decisions. This is where you're going to be looking at market cycles, seasonality. You will be taking into account certainly our intelligence in the markets. You want to also further compound that with fundamentals, geopolitical news. You want to be very aware of how the markets move week to week from a range point of view, also looking at sentiment, daily cycles in the market, and then putting that all together to give you a research driven approach to the markets, which will give you an edge. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also have access to real-time trade alerts, real-time trading research and market insights, access to our private members academy website, and also access to support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.